I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. But the stock market had a choppy week, as it seemed a modest early decline was reversed by a strong midweek rally. That ended abruptly, however, on Thursday as President Biden announced an increase in the capital gains tax. At least that's what was proposed. That will bring it to the highest level ever, 39.6%, plus the Obamacare Medicare surtax of 3.8%, lifting the capital gains tax to 4.34%. Plus, where you live, your local taxes. For example, California, you add that all together, the California capital gains tax will be 56.7%. In New York, 56.2%, and that's, of course, for top earners. The market acted swiftly to these confiscatory taxes, and you saw a big decline. I'll talk more about that. If it can pass, then the collections actually will fail in the long term. Yeah, you'll get maybe a little bit of a boost in collections, but then just as historically we've seen in the past, as investment in stocks drops, the stock market gets sold off. Well, think about 2013, the last time they raised it, and the proof is that they actually did collect less taxes. And that is the issue with this kind of insane thinking. Monday, actually, the market was down, and we were looking for an early decline this week. It came pretty quickly as Bitcoin gets slammed on the news that the U.S. is coming down on some financial institutions for money laundering using crypto transactions. We actually do expect that crypto will be making a short-term bottom soon. We were looking for 49,000, 5,000, and 49,000 or 50,000, which it got down to now. And then we think there will be a potential bounce, but some damage is done there, and we may not see higher highs. So we'll be talking about that with our members on Wednesday. Tuesday, the market was down again. There were three pieces of background news that did hurt the market. What happened was the U.S. Said that they were going to tighten travel restrictions on 80% of the countries out there because of COVID flare-ups. India is the worst. They had a day with 330,000 new cases and a record 2,000 deaths. So it's very horrible there. And there is some fear about COVID flares around in other areas of the world. Also, Bank of America, they came out and they reported outflows of client funds, which is pretty unusual as the market comes up to a high. Maybe investors are getting smart. And Powell came out with a letter. There was a letter that he sent to Senator Rick Scott, and he said the Fed will limit any overshoot to inflation. Well, don't you see inflation now? Is it time to think about that? Remember the temper tantrum back in 2018? Well, that's what we're looking at out ahead with a lot of other things that we're going to be facing as far as this tax situation goes. Wednesday, news came out Netflix missed on their subscriber growth, and the stay-at-home stocks, Netflix, they all got hit as the market is looking at the recovery, and that's why we're at the levels we are. Why should the stocks that did really well during COVID continue to do well? So Netflix fell like 8%, and that weighed down on the market early, but there was a big reversal as the market returned to the upside. We were looking for that kind of action as we expected the market to turn up by midweek. And what's happened was the S&P 500, which was down a modest 13 points, rallied strongly and closed up about 37, a big 50-point reversal. And that we thought set the bottom for the week, but it certainly got tested on Thursday. Thursday, that carryover buying did not last long. Right around midday, after the market responded on better initial claims for unemployment, the news came out that Biden had proposed this big increase in capital gains. And the small gains that the market had at the time turned into a quick loss, pretty much the reverse of what we saw on Wednesday, as the market fell to minus 50 points for the S&P 500 at its worst level, closed down about 38 points. Investors were pretty shaken up. Many think that the wealthy, who are these big stockholders, have these huge positions that the country is attacking, or will be, they may need to sell to raise money to pay those taxes. Well, I think it goes way deeper than that, and prepare for a little bit of a rant right here. The reason for low capital gains taxes is so investors put money into companies. They provide money for companies to be started up. They provide money for the companies to borrow money. Investment, borrowing, all of that comes from wealthy investors. And the low capital gains tax is so that they hold on to these positions and don't put a lot of pressure on these companies. It brings R&D, it brings innovation, it brings incentive for business creation, capital creation. It raises employment. That's why we have a low capital gains tax. You can be like one of those people that deny it or just side with an attack on capitalism, and then the country suffers. You want to spend more money on important programs? Yeah, I won't deny certain programs are important. Balance the damn budget, and then you'll have some money so that you will be able to spend money on important things without overwhelming this country with debt. I also want to note that if you could borrow all that money, why would you not be borrowing the money and raising that money to pay down the debt for the ridiculous things that have been spent on before? We have this massive debt here in this country, and the only thing they can figure out is to tax the productive parts of the country to pay for things that they think fit well into their moral view. So that's my rant, absolutely, and I sure hope that there are people out there that are sane that can get in the way of this, because you can't unsee it, and you can't unsmell it. The damage is certainly done, and it sets a trend that I think is destructive economically, and this destructive wave may have energy. Market is recovering here on Friday, and getting about 40 points to the upside in the S&P 500 right now. On our analysis, this fits in pretty nicely, but again, we do believe that the trend is set in here now, and the market is not going to be happy about the tax situation they're looking at going forward, and investors will be reacting. For the week, the stock market, the indexes are really narrowly mixed. The S&P 500, NASDAQ, Dow Jones, they are very, very close to unchanged on the week. Dow Jones Transportation Average did make a new high. Bond market, 30-year, small gain on the week. 10-year yields around unchanged at 1.57. Gold market and silver market wiggling a lot and a little better tone to them, but unchanged on the week for both of them. The dollar does move down 0.6%. It's just the third week in a row. The dollar has moved down to some support. Excuse me. And there's a reversal to the upside that is due. Now, we have downgraded the dollar recently, and please watch our Future Speak show in order to see our comments about that. That's Wednesdays for members, level 2, 3, and 4. Oil market down about $1 on the week. And that is the opening of the show. Coming up, we're going to see some very great analysis. We have tons of requests from India for the analysis on the Nifty 50. So we decided to show that today as part of our new international segment that we do. So we're going to share our analysis on the Nifty 50 and the German DAX. There's 8 other countries that are included in that for members, but you're going to get a preview, a peek of that. I'm going to give a cycle analysis lesson using a very interesting chart, the US dollar versus the Canadian. So we're still staying in this international theme. And then I'm going to give you my analysis for the S&P 500 at the end of the show. So that's it for the opening in here. Please do stick around. There is so much for us to show you. Make sure that you go to the askSlim.com website, explore that. If you've never been a member at all and you're brand new, become a free member just to be in touch with us. I have a little special I'm going to show you right now about becoming a level 1 member. If you're watching this on YouTube, subscribe to the channel, click that notification bell, and we'll let you know when we put up one of our videos. We do it several times a week, and I think you'll enjoy that. Like this video, make sure you give it a thumbs up. And follow me on Twitter at askSlim.com. Write to Matt, our COO, at askSlim.com, M-A-T-T at askSlim.com, and he's going to give you some information if you want it about our membership and questions on our huge offering of education and analysis. Here is that level 1 special that we're running right now. You will never get so much for so little. This is crazy. Slimulator Momentum Tracker. This is for position traders and investors. Built-in algorithms on this app that we developed for scanning for the momentum conditions on over 1,000 symbols, 20 different canned lists in there, and all kinds of sorting and scanning. You're going to think it's amazing. You're going to get our weekly stock index report with the technical analysis on the S&P 500, NASDAQ, and the Russell. You're going to get our Spider ETF weekly review with technical analysis on the major sectors. You're going to get our new access to the new trader workbench. It's essentially the hub where you can organize and prioritize and save and track analysis to all of the research that you do. You're going to also be participating in some of our live shows, and you'll always get our live replays, which is 70 minutes of really packed teaching and analysis for askSlim live events and some special videos that we're going to put in there. So all of that, just $14.95. It's just crazy. $30 for a quarter, $10 a month. So if you're brand new and you've never experienced us, this is a great way to do it. Just spend $30 for 3 months, and you're going to want to upgrade for sure, and then we'll just refund anything that you don't use if you want to upgrade too. So start out with us for just a level 1 membership, and you're going to get a great idea of the amazing things that we bring. Go to askSlim.com to join, and you will also be able to ask questions if you want from Matt at askSlim.com. All right, so now we're going to get into our special right over here of international markets, of which Arvi, who is our head cycle analyst, does all of our trading ideas. Just fantastic work always from Arvi, and one of the real experts of cycle analysis in the world, and we're really proud to have him bringing you these international markets. I just want to make a note that you'll see here in this brief little slide to start out that the full video will be available to the level 2 membership, level 2, 3, or 4, all 10 international equity markets with this cycle analysis on it. So if you want to become a level 2 member, you can write for our special to Matt at askSlim.com. Here we go. You're going to really enjoy this. This is just a short clip with the Nifty 50 and the German DAX.
Let's go ahead and look at the Nifty. So this is the Nifty 50. What we have on the Nifty are these very nice longer dominant cycles here, and if I zoom out on this chart, you can see how clear these cycles have been. We add in, as I mentioned earlier, these dotted black lines, so you can see how the key weekly lows formed relative to the idealized timing, which means relative to the troughs of these cycle brackets that we have drawn on the chart, and they have been really very clear going back many years. If we zoom in, let's go ahead and see what's going on now. So the Nifty is in a corrective period here on the intermediate term. The next key low is due 531 to 823. You can see that our weekly momentum is also negative, so all of this is lining up for further downside in our view. On the downside, we have an intermediate 38.2 and an intermediate 50 at 13,943 to 13,400. 483. That's really the zone that we would look for on the downside into this next corrective low. If we shift over to the daily chart, you can see these beautiful daily cycles here in the Nifty with this dominant daily cycle, which is then broken up into these minor half cycles. And what I've done is I've drawn in how these dominant daily cycles have formed over time, and I've added in these green arrows to show that we've had a positive cycle. What does a positive cycle look like? That's when you have a cycle high that's higher than the prior cycle high and a cycle low that's higher than the prior cycle low. And under those conditions, you look for a new swing high to form in that next cycle. And that has happened with each of these cycles going back to late last year. Now we have our first sign of change here. I want to highlight that we have now violated this key cycle low, which says that we are now in a negative cycle very likely, and we will look for lower prices overall into this next corrective low. Now the next short-term low is due 5.6 to 5.19, and if I zoom in a little bit here, you can see that there is a mid-cycle low due, right? So we're looking for a bear flag to form and for this to roll back down on the downside. Now on the upside, we are looking for the Nifty to test this 14,604 to 14,883 zone. That's really where we would look for this to fail and then roll back down. Also note that our slim ribbon is now configured negatively, as you can see here. So let's go ahead and shift over to Europe, and we will look at the German DAX. So this is the German DAX. What we have here on the weekly time frame is a dominant weekly cycle, which is then broken up into these minor half cycles. And these dominant cycles, if I zoom out on the German DAX, have been very, very clear. Note this beautiful head and shoulders that formed here, and we almost got right to that target here back in late 2018. So a picture perfect and a very clear head and shoulders that formed there. If we zoom in, let's go ahead and take a look at what's going on now. So we are in a very bullish overall mode here with super positive upside momentum here on the weekly time frame, as you can see right there. We are looking for a high to form relatively shortly here. We are also testing some key intermediate term levels here from 15,345 to 15,802. We would really look for the DAX to not really get through that zone and then to start to roll back down on the downside into this next forecasted timing. The next forecasted low on the weekly time frame is due 525 to 726. If we shift over to the daily chart, which is on the right here, you can see that we have been tracing out positive cycle after positive cycle in a very bullish overall trend that you can see here on the weekly time frame. We were due to form a short-term low. The short-term low was due 414 to 54. You can see that we had this pullback, and we are now likely in this short-term rising phase here in the German DAX. Now I've added in this note, watch for an early high in this next cycle. And that is because of where we are in this dominant weekly cycle. And given that we have already had the move that we have had and are testing these key levels, the odds would favor that an early high would form here on the daily chart, and we would see some rollover back on the downside. So we will be watching for an early high right around this early to mid-May time period. So just keep that time period on the radar. If we get a rally here, and then we get a failure that takes out this daily cycle low, that would say this overall bullish cycle structure that we have seen here is now over with, and we are really setting up for further downside. So this is a very key chart to be watching here, and that's why I wanted to take a few minutes to highlight it. So
Thank you, Arvi. That was absolutely great work. Really a thrill to have you doing these international markets. I know that our members and a lot of people from these other countries are going to be happy to see that. I just want to remind all of you, especially those from India, because we have so many followers there, that we're making this available today as a special. and the next time we'll show India on YouTube or in the Market Week show will probably be several months down the road. So please do consider becoming a level 2, 3, or 4 member, and then you'll have this every 2 weeks. Where we do these updates on these 10 international markets. So great work by Arvi, just superb, and really glad that he is doing these now. And I'm sure there'll be a lot of people that are members that also will be very happy. All right, so now we're going to move a little bit forward in here as we do something very special. We have a lot of people that ask us questions about our analysis, and we've put out some basic cycle analysis videos, and we have a cycle analysis workshop that you can get some information on if you go to our website. Fantastic 20 video modules plus another 20 something videos. It will keep you busy for like 30 or 40 hours at least, and then you're going to want to watch it a number of times. So I'm going to give you a little primer right now as I look at the US dollar, Canadian dollar now, and we'll just take a peek at a chart that I think you're going to find really interesting. So whoops, didn't mean to do that, sorry. Crazy. Let's take a look as we look at the chart right there. There you go. So there is the US dollar, Canadian dollar. And as you can see there, you're looking at a candlestick chart, and you're looking at a momentum indicator in there. So when we start out our cycle analysis work, what we look at is for what looks like a rhythmic money flow. Now, that is what really at the core of what cycle analysis is. It's a repeating period of time. Just like when you look at oscilloscope or a heartbeat monitor, there's regularity in the period between the cycles. Cycles are measured from low to low. So those of us that are trained in cycle analysis immediately look for the rhythms in lows. And that's where we always start when we begin our cycle analysis. So this is the US Canadian dollar, and you can see in here I'm looking at a 10 week, but we're only going to look here at about 4 years of the 10 weeks instead of 10 years to do this analysis. Generally, we like to go back minimum of 3 cycles, and it's really great when it works out for longer, for a period. So what I want to do is I just want to look at where some key lows are that might identify the rhythm in this particular symbol. So I can see that there's a pretty important low that occurs like right over there. So I'm going to put a little arrow there, and it looks pretty clear that there's another one right over there. So I'll just put these arrows in, and it looks pretty clear that there's another one right over here. And so what I'm noticing right now is there's sort of a common distance between these lows. Remember, cycles are measured from low to low. So I put another one right here, and wow, this is kind of looking like an interesting rhythm in there, as you can see. Well, there's clearly a low right at this point right there. And then if I kind of look for another common area, common distance, it really looks like it's right over there. Then there's another important low seemingly right over here, and now you can see there is kind of a rhythm setting up. So if there was an ideal rhythm, in other words, let's just put this back right like this. What I want to do is I just want to discuss if it was an ideal situation. Let's say if you had even a directional component that was kind of even. In other words, there was no significant up and downside movement. They probably went up and down for the same time period. Then you'd get the low right over there. It would come up half the time, and then it would come down another half the time. And that would be the way the oscilloscope would look. It would be kind of like that. It would go up for half the time, and it would come down for half the time. And you can see I'm identifying these cycles right in there. Just go up half the time and down half the time. And all of a sudden, the rhythm is kind of showing. You can see that. The rhythm up and the rhythm down. The only thing is that when you look up at the charts, well, the peaks don't exactly come at the time that we're talking about. What happens is that the peaks end up to be at you can see this peak right over here was about halfway, but this peak right over here was about 3/4 of the way into the cycle. This was about 3/4 of the way. There was a peak here about 1/3 of the way, and then these other peaks were lower. So things change, and that's because of the money flow, the energy that comes in. So if I were to grab this right over here, I'm just going to activate this, what we'll call the zero upward energy. And if I were to then turn it up right over there, then things would begin to change. And I would then kind of set this up like this, where the upside of these cycles were like right over there and the downside was right over here. And now you see what's happened is that it established an uptrend. And uptrends give you later peaks in the cycles, as you can see right in there. So this is kind of what we go through mentally. We don't put these lines on the charts like you see right over here, but I'm identifying the rhythmic motion and seeing how the energies are affecting it. The momentum indicator right in here actually helps us identify the cycle rhythms, as you can see very clearly. And then also you look at things like support, resistance, and potentially breakdowns and breakouts. You can see right there clearly this downtrend that you had in there that was right like this had a breakout and then moved very sharply to the upside. So I just wanted to give you that little piece of all of everything that we do. Once we look at it and begin to set where we think these rhythms are, we then begin to build the chart. And eventually what happens is that it goes from kind of our mentally looking at something like this to then looking like something like this, which has basically the same information in it. However, now it has way more information, and those of us that have a trained eye understand what this means. So here you can see those cycles are now shown with these cycle brackets on the bottom, which are the ideal rhythms that I was talking about. And then you can see what happened was you had an uptrend right in here. The uptrend stopped by having a head and shoulders top. It then came down exactly and hit the head and shoulders measurement. There are important support and resistance levels that are put in. When you get something like this cycle right over here, then only a small rally that you see right there, and then a breakdown. So in other words, the cycle low was right over here, is a couple weeks early. Principle of variance says that that's well within the normal time frame. It rallies 2 weeks. It's called an extreme left-hand translation because once it broke this support level from that cycle, it said that it's likely to decline all the way through the end of the cycle. Look what happened. These yellow areas that are highlighted are the points where there is a nesting, where both the minor and the larger cycle come down together, and that brings declines, as you see here and here and here. And guess what's coming right over here? So what these cycles that we're looking at are syncing up to is a low timing that works with our daily analysis that comes into the mid-June period right over here. So this nesting area is the end of May, and the daily pattern that we look at takes it out to the middle of June, and that's why we say we're looking for a low mid-June or between late May and mid-June. So we've applied all these cycle patterns. We see the money flow. We've looked at momentum. And then we put in the support and resistance zones. We use what's called swing high, swing low analysis. I've done a couple videos on that in our library. And what happens is that we create the resistance zones or the support zones. In this case, the resistance was right over here based on the fact that it had broken down. And you can see what happened, and it gave you great information as it turned down again. For our analysis on momentum, we use what's called the reversal scout on weekly and also on some very short-term things that Matt shows you with the stock index report live And then on the dailies, we use the slim ribbon PO for the momentum analysis. You can see in here, momentum remains down. 5 weeks of failure right over here in that resistance area. What's weighing on this market is the fact that oil is now turning up again, and the Canadian economy benefits from stronger oil. We think it is going to continue to be firm for a while, and that is going to lend support to the Canadian dollar. So hence, the U.S. dollar turns weak. Remember, as this moves down, it's a reflection of the U.S. dollar versus the Canadian, and we expect that to happen out into May, June. Also, if with the U.S. Taxes going up, it really creates a much weaker economic situation, and that's going to make the dollar struggle in here. And if it can pass, or some variation of a big tax increase for corporations for capital gains, that's going to continue to weigh on the dollar. So it's kind of a double whammy: strong energy and weak dollar from the tax situation, and we think that there is a pretty good chance that this is going to fall pretty significantly when we look at that. It could come way down to this last support way over here, which would be around 121. So there is a lot of risk when we look at that. You can see these magnificent cycle rhythms that I showed you as we were building from this mentality right here to getting to this great information that you see right there. That's cycle analysis, and that is a great look at what is a bad situation for the US dollar versus the Canadian dollar, which should be declining for pretty much the next 5 to 7 weeks in here, with rallies continuing to fail. I hope you found that incredibly informative as we showed you our very basic primer on cycle analysis. And please do go to our website, look for the tab on the top and the navigation for Cycle Analysis Workshop. There are actually 2 workshops in there, and you'll get an idea of what's in there. There's a table of contents and a video, and just go in there and watch it and take a look at it, just for further information for you. That is a look at cycle analysis for the US dollar and Canadian. All right, so now we're going to look at the S&P 500 as we look at the view for the next 1 to 3 months for the stock market. In the last couple of weeks, we've been talking about the fact that the shorter-term patterns were looking like they were going to have a correction that would take it down between 2.5% and 3.5%. That correction, including having just missed those lows again on last Thursday, when the news of the capital gains tax increase, when that came out, that didn't break it down any lower. So that correction was about 1.7%. That is a very strong condition. And it still reflects the fact that the stock market peak is not in yet. And we do expect that will be coming. However, it will be a little while before we see that peak, and we've been anticipating May to sometime in June is when that peak is going to come. And there's actually a peak expected in May that may be the first and significant peak. So we're not really sure about that. Let's take a look. I'm going to move away this analysis on the Canadian dollar, and let's take a look now as we look at the S&P 500. If you just watched our analysis on the Canadian dollar, this gives you a good idea of what you're looking at right here in the S&P 500. So what we note is that the market has had some wide swings these last few days, as we had a big upside reversal on Wednesday, the failure on Thursday that had the market down 38 points on the close, down as much as 50 on that tax news, and now reversing today up almost 50 points on the day, and just getting very close to the all-time high. So when I look at the short-term chart, and I'm not going to put that up here because we're really looking at 1 to 3 months, there's an important level. Let me just look at these last 1.5 cycles that you see right over there. That important level, which was established last week as a short-term cyclical low, was at 410.59. We're now at 417.91 was the peak. We're 417.24. So you can see we're getting up close to an all-time high, which pretty likely is going to get taken out today or Monday. We expected that the market would continue up sometime into May. And you can see our projection, that's still the case. You could see in here the momentum condition and is strongly to the upside. Now, that is, I think, important information as you look at that, because that's this upward directional component that's lifting the market. We're going to have to see the short term, and which would be the first, and then this turning down before we get any real sense that the upward momentum is waning. We would get that also the first indicator if we break that 410.59 level. Our expectation is that we could be moving up as high as 423 right over here. There is a little lower resistance on the daily chart, which our members will have when they look at that in the S&P 500. But basically that has been our projection was on the upside to 406 to 411. It then moved through that, and the next level up here is at about 423. We expect that this will continue to move up. We note that that level of 410.59, were it to break soon, it would set up a top already being in place. That level will change in a few weeks depending on how the structure sets up, but right now that is the key level. The expectation is that once the peak is made in here, that the decline will come to around 400, potentially down to the 395 area. Now this is really a rising support area, and as it gets higher highs in here, these numbers will rise, except for that 410.59, which will remain a key number. If that breaks, you know this correction already began, and then we'll be looking for that decline. Now, moving down to 400 to 395 is not all that huge of a decline in there. It's, like 4 to 5%. And that's what we're really looking for in this decline, which takes you into the end of May or beginning of June. Then after that, we think that the next rally over here will be the end of it. And we'll talk about that in some big picture analysis moving forward. So right now, what we're looking for is some modest higher highs, a sizable downside move, we'll call it 4 to 5% down into May. That's about 6 weeks from now. And then another rally up over here into late May, early June, and then a lot of trouble out over here in the summertime as we think the first leg of some downward danger occurs there. Maybe it becomes apparent that President Biden can pass his ridiculous increase in capital gains, and then the market will react pretty negatively. Right now, I think this upward tick that we're getting in the market and this recovery is investors saying, maybe we can't pass this. Maybe Joe Manchin will get in the way, or maybe the numbers will be a lot smaller. It is an attack on capital creation, as I said in the beginning of the show, and if anything like what they proposed is able to pass, the markets are going to react severely to the downside. Well, that's at least my opinion. I think that this 12-year now bull market is coming to a time frame where it will end, and you can see in there that, we have outside up over there about 430, 431 as where that level could be. I don't think it's going to get there, honestly. We're just going to target 423 as a potential either now or out there into the June period, and then a lot of trouble. So we're looking at 1 to 3 months and a little bit further as we target out into that May-June peak, and then that period of a lot of risk coming out in the summer. That is a look at this beautiful S&P 500 chart with cycle analysis on it. Remember that if you want to learn cycle analysis, do go to our workshop page, and you'll be able to watch a video on that, and you'll also be able to look at what's in our table of contents and all the things that you will learn that will take you weeks and months to do that workshop. And if you do register for it, it's yours for lifetime. As long as askSlim is around, then that will be yours to go through unlimited amount of times and to learn. Also, if you become a level 4 member, you can get a 20% discount off of that workshop. So that would be something that you might consider. That is a look at the S&P 500. I hope that you found the information that we shared with you today to be extremely valuable. Remember that we're offering for newcomers a level 1 membership on this special, just $14.95 a month or $30 a quarter for all of this. And you'll be able to really get a lot of information and a taste of what we do. Make sure that you go to our website and explore that. If you're watching this on YouTube, subscribe to the channel, click that bell so that you get notified of our videos. Give this video a thumbs up and make sure you go to our playlist and watch some of those older things that we put in there. Lots of great information. Follow me on Twitter at askSlim and write to Matt at askSlim.com to get more information on all of our fantastic offerings that we have at askSlim.com. We want you to be the best trader that you can be because your success is plainly our success. I want you to be so careful. It is so crazy out there. And we're always wishing you great trading.